Hey, good morning, everybody. Today is Wednesday, December 9th, 2015. My name is Cliff Backus, and this is your push-button-stock-trading.com daily video market review. Markets closed lower yesterday, but off their worst levels of the day. Trading volume was mixed, lower on the Nasdaq, but higher on the New York Stock Exchange, adding a distribution day to the S&P's count. The S&P closed below its 200-day moving average, but found support at its 50-day. Cold comfort for the bulls. The IBD 50, however, closed slightly higher. The IBD 50 is continually updated with the most powerful momentum stocks and is a good indication of what leadership in the markets is doing. A positive IBD divergence could be a good sign for the bulls. New lows bettered new highs by a widening margin. Large capitalization stocks outperformed small, although small caps continue to outperform on a 10-day moving average basis. Outperformance by small caps is more consistent with a bull market. Declining issues outpaced advancers by better than 2-to-1 on the New York Stock Exchange, and the New York Stock Exchange advanced decline line is beginning to show weakness again. In spite of the seeming weakness in our indicators, our market timing model remains stubbornly on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin on our portfolios. According to Investors Business Daily, the O'Neill market timing system is indicating an uptrend under pressure. The distribution count on both the Nasdaq and the S&P is very high, with 8 days and 7 days respectively in the past month. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can be an indication that the uptrend is in trouble. While both our model and the O'Neill model are technically on buy signals, our secondary indicators are showing signs of strain. The bull market may be getting tired. As always, keep your stops in place on all long positions and be sure to follow your written sell rules. If you'd like help with your portfolio management or with your written rule set, please feel free to contact me. My contact information's on the home page. Okay, let's take a quick look at our spectrum analyzer. What we're looking at here is HGSI, High Growth Stock Investors, universe of over 8,000 stocks, sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. Let's plug these stocks into our spectrum analyzer and see where the strength in the market is. As we can see, the application software sector had 10 stocks in our top 100. Semiconductors had 7, beverages 6, Internet media 5, and rounding out the top 5, we have medical devices, packaged food, and IT services, all with 4. Recently, we've been seeing a lot of application software, and we've been seeing a lot of semiconductor devices. These might be good places to be looking for strength in this market. I want to start today by taking a look at the Russell 2000. The Russell 2000 has really been kind of our tell in this market. Notice how the Russell has been finding resistance at this level in the 1194 range. We tried to better that resistance area back here in November and failed. We tried again in late November and we failed again. The Russell has put in a series of higher lows and modestly higher highs. We have this support level down here in the 1179 area, followed by this high. We had this low, followed by this high. It's important to see whether the Russell, which undercut its 50-day moving average yesterday, is able to hold support down here, minor support down here in the 1141 range. As we've said, the Russell really is the key to the market going forward here. The Russell has been having a lot of trouble getting out of its own way. We'll see if we can put together a little bit of a rally in the Russell going forward. Let's see what the Nasdaq Composite's up to. Nasdaq yesterday was down 3.57 points or 0.07%. We closed at 50.98, and notice how we closed right at the top of the daily trading range. That offers a little bit of encouragement to the bulls. Trading volume was below the prior day, and for you followers of William O'Neill, we are in an uptrend under pressure. The market has been in an uptrend since October 10th. In the past month, the Nasdaq Composite has had 8 distribution days, but notice how we have 4 distribution days all clustered here at the right side of the chart. This is bearish action and is the reason that our uptrend is under pressure at this point. Right now, the Nasdaq is bracketed by support down here in the 4,900 area and resistance up here in the 5164 range. Our market timing model on the Nasdaq is currently on a buy signal, which indicates that both aggressive and conservative traders can be buying at this point. But we shouldn't be increasing margin on our portfolios. Let's take off the markups here. And I want to again review what the Nasdaq would have to do to go to a don't buy signal. To go to a don't buy signal, 3 things would have to happen. First, the 10-day simple moving average on the Nasdaq, which we show here in green, would have to be lower than the prior day. Currently, it is lower than the prior day. The 21-day exponential moving average, which we show here in pink, would have to be lower than it was 2 days prior. Currently, that criteria isn't being met. And the last thing is the Nasdaq would have to trade at least 1% below its 21-day exponential moving average. That's this envelope right here. In order to go to a don't buy signal on the Nasdaq, we would have to close below this level. Let's see what the S&P 500's up to. S&P yesterday was down 13.48 points or 0.65%. We closed at 2063, and notice how the Nasdaq closed below its 200-day moving average, which we show here in black. We closed just below that level right here. Yesterday, trading volume was higher than the prior day, which gives us another distribution day on the S&P. And the S&P right now is in an uptrend under pressure with 7 distribution days in the past month. Again, we have this cluster of distribution days at the right edge of the chart, which is bearish. Nasdaq right now is bracketed by support down here in the 2044 area and resistance up here in the 2134 range. But more importantly, we want to see how the Nasdaq reacts around its 200-day moving average. Before we go, I want to take a quick look at Becton Dickinson. Becton Dickinson recently broke out of this nice first stage cup and handle base with a pivot point in the 153.25 area. Becton Dickinson actually gets a 76% checklist rating, and yesterday bounced off of its 10-day simple moving average on higher trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. If you missed the breakout in Becton Dickinson at the 153.25 level, you can buy Becton Dickinson on this pocket pivot right here. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.